Hey there, this is Scott Welsh. It's Wednesday, June 22nd, 2016, and this, of course, is the weekly blog post.
What time is it? Game time! Woo!
Indeed, it is. Things have settled down quite a bit for me lately. After last week's debacle by going through all those trades and going through all the hours and all the worry, version 1.6, as I talked about last week, seems to be working perfectly well so far. And the universal version for FXCM and different servers has also been working pretty well from the feedback that I've gotten. So that's really been great and pretty much solved the problem. Plus, just a side note, I might be moving to a VPS with Oanda very soon anyway. So the other worry about being a robot trader is obviously the connection problem and being in a new spot and worrying about the connection in a new spot. That's been on the top of my mind actually for a while, but everything seems to be working properly, so I don't really need to worry about it. And second of all, if I move to VPS, as long as that works properly, then there's nothing to worry about. So what I'm trying to say is I don't have a lot of whiny little worries to worry about right now. So what does that mean? It means it's time to start making some money. Now, the biggest problem for me, and maybe it's the biggest problem for you too, is wanting proof. I definitely, speaking just for me, and a lot of this blog post today and even tomorrow on the webinar is going to be me talking about things that I worry about. But for me, the biggest problem is I want this proof. All right, I build this robot. I built it. I love it. I think I built it the right way. I think I've got my testing procedures down. I think it's safe. I think it's smart. I like the numbers. Now, how do I know it's going to work? Right? How do I know? How do you know it's going to work? Well, the only way to truly know if something works is to give it time, right? That provides the answers. You build a robot, you love the numbers, and then you just watch it. And if it goes according to plan, then you're fine. If it doesn't, it doesn't. But you can spend way too much time waiting around, right? There are tennis students that I've had that want to work on forehands and work on backhands and work on their server, work on something and keep working, and they never ever get into a tournament. And time goes by and months go by and there's no competition. You don't really know anything until you start trading it, right? And you can wait way too long to get started. I've seen it in my students, and now I'm really worried I'm seeing it in me. There's an old phrase, it's one of my favorites. The only joy in the world is to begin. Well, for me, now's the time. It's time to begin. Think about this. And again, when I say this, I'm talking to me mostly. You make no money if you don't trade, right? I understand the intelligence and prudence of doing research. I do an incredible amount of research. I'm incredibly beholden to the principle of failing to prepare is preparing to fail, right? I believe in research. I believe in research before these blog posts. I don't just wing it. If I'm talking in a live presentation at one of Rob's conferences, for example, I never just wing it. I never wing it. I always do research. But guess what? Being a good researcher, being thorough, doing your job with all the preparation doesn't change that statement. You don't make any money if you're not trading. You don't win any titles if you're not on the court, right? You don't win championships in the exhibition season or just sitting around talking about it, right? And this is where I'm at right now. So, okay, it's time to trade. I agree. It's time to get started. Well, what do I trade? I mean, how do I actually get started? And furthermore, how will I ever know that my trading strategy is going to work, right? I don't want to get started unless I know it's going to work, right? This is what I think. Maybe it's something that you think too. I've had students come to me, well, I don't want to play if I'm going to lose all the time. Well, how do you know? The first thing to understand is you'll never know for sure if your trading strategy is going to work. You'll never know. Never, ever. You'll never know. But what you can do is start trading based on research and probabilities. All right, consider this. All right, consider I come to you with a trading strategy. What is holding you back from this strategy? Or what would you need to know to get started? All right, let's go to the screen. If I came to you with this, is this good enough to get started? Or would you need more research? Here are your considerations. Number one, what if I told you you only trade on Fridays? Well, what does that mean? Well, first of all, less can go wrong, right? The less time that you're trading and pressing buttons or having the robot press buttons for you, the less time you're in the market, there's less things that can go wrong, right? You don't have to worry about connection if you're only in a trade for a short period of time. I mean, what are the odds that the internet's going to go down or your VPS is going to crash or something's going to go wrong when you're only in the market 1 day a week? Obviously, it's just simple math. The less you're in the market, the less that can go wrong. On the other hand, the more that you trade, the more possibilities there are that something goofy is going to happen, right? Now think about the Swiss franc fall in 2015, right? That fall didn't hurt me at all. In fact, I honestly didn't even think about it until about a week later. Oh, I looked at the charts and like, yeah, that was a big gap, and it didn't really even hit me right away. Why didn't it hit me? Because I wasn't in the market. In my day trading portfolios, I'm not in the market very much. I only trade a fraction of the day. So if you're not in the market, the Swiss franc can't come get you. If you're not in the market all the time, these market shocks can't come and steal all your money, right? So if you're trading only on Fridays, your odds of something going goofy and crazy or execution going wrong are very small, okay? So that's kind of a plus, right? And if you only trade on Fridays, you're a specialist. Now think about what that means. You're trading a specific pattern at a specific time of the day with a specific group of people, right? We're all creatures of habit, and people who trade on Fridays have a very unique mindset. The weekend is always coming for you, right? The weekend is always the next day. So the chances of people being in the same mindset on Fridays seems to me to be way, way, way greater than any other day of the week. Mondays, who knows what you're thinking? You're either too happy, too sad, too angry, too tired. Tuesdays, I don't know, maybe you're still trying to make up for Monday. I mean, who knows how you're going to feel on Tuesday? Maybe the weather's nice and you feel great. Wednesday, we have announcements, news announcements. Thursday, too. So it seems to me that Friday is the one day where the same traders are thinking the same thing. Furthermore, if you're a specialist, I mean, think about it. Think about the patterns that happen if you're a specialist and trading only one day. If you go to a specialized computer store, a computer store that only fixes PCs, for example, and only does a specific thing, you can be very, very assured that when you go into that shop, you know what you're going to get. A specialist isn't going to all of a sudden start doing crazy things, right? You're not going to go into your computer store and all of a sudden they're selling sandwiches on the side, right? When you deal with a specialist, you get the same thing. They're specializing in one small thing. It's a restaurant with a small menu. It's a computer store, right? So the chances of a specialist then changing the patterns are not very high. So if you're trading on Fridays and trading a certain pattern, doesn't it stand to reason that that's going to be very, very repeatable? Even though your sample size is going to be way down from a mathematical standpoint, doesn't it stand to reason that the chances are your patterns that you're trading on Fridays will be similar, right? That's the advantage of being a specialist, right? Now, let's talk about a Friday portfolio that uses those considerations only in one day a week, trading a very specialized pattern. All right, here is a very small portfolio of Friday only robots, right? The average return per month, and we'll go to the spreadsheet in a second, but the average return per month on a hypothetical $10,000 account is 70 bucks. Okay, well, that's not that great, right? Okay, I hear you, totally hear you. Remember, I had these trade size ratcheted way down, but consider this. The biggest drawdown in that very same portfolio is just under 200 bucks. Whoa! On a hypothetical $10,000 account, you're only risking at its worst monthly drawdown $200. Well, can definitely live with that. All right, well, let's say, okay, I need more money, and that's ridiculous. That's not even trading. Fine. If you take your drawdown up to 1,000 on a month end basis, so you multiply all your trade sizes by 5, so now you're looking at a max drawdown of 10% on a hypothetical $10,000 account of $1,000. That's the worst it's ever done, right? Most months are not that, at least according to research, right? The worst case is 10%. Most of the cases are under 10%. Then your monthly returns, hypothetically, of course, turn into about $350 a month. And now we're starting to deal with something a little bit more substantial, right? If you traded a bigger account, a $100,000 account, now we're talking about $3,500 a month. And now we're getting into money that can be used to pay real bills, right? Furthermore, the monthly winning percentage of a Friday-only portfolio that we're going to look at is about 80%. So in 80% of the months tested, they were profitable. 20% were not. So let's take a quick look at that very spreadsheet of which we're discussing. Now, maybe I can make that a little bit bigger for you. Okay. If you look at the average per month, and this goes way back to, and let's scroll over, 2003, right? 150 months or so. Going back many, many years, it averages about 70 bucks per month. We talked about that. Now, lately, in the past year and a half, since 2015, it's averaged more than that. So Friday portfolios have been doing better lately. And since 2014, it's better than the average, right? So in fact, things have been on an upswing lately with Friday-only robots. Interesting, right? And there's your 80.5 winning percentage for amount. And actually, let's fix this right now. Fix it right in front of you. I meant to, you just scroll down here. So actually, it's going to be not 150 months or 150 whatever it is I said. It would be 155 months. Oh, that's perfect. That's exactly what I didn't want to do. Ready? Look at me do my math. I am a spreadsheet wizard. Don't act like you're not impressed, right? I know that was pretty impressive. All right, so it's 80.6% of the months are profitable. Excellent. And then I'll just go ahead and do that too. All right, anyway, 80%. Can we just stick to 80% and not worry about the minutia? It's 80%. All right, and there are your profits. Now, what robots am I trading? Well, I'll show you. This would trade the dollar yen, the CAD yen, the pound CAD, and the dollar Swiss, right? So just trading those four. Now, obviously, I've done research on many, many more, but those are the ones I like the best. How do I like them the best? Well, I like to look at how many months they lose. So that's why I picked them. I picked them because I felt like these don't lose that much on a monthly basis. So I like them. So that's a portfolio of 4. You know, I like up to 5. I could add one more and do the numbers on that, but these are the 4 I chose for today, all right? So that's not really that bad, right? You've got only one day of your week. You've got only one day to worry about. You've got a decent amount of money. You win like 80% of the time. If you ratcheted it up, the trade sizing, you could make a significant amount of money. Okay, I mean, that sounds pretty good. At least it does to me. All right, now, assuming I'm not a crazy internet person trying to sell you something, right? The problem with the internet, at least from my perspective, is it feels like everyone's trying to pull one over on you, right? Buy this stuff, steal your money, steal it quick, steal it from as many people as possible, get my money and get out, right? That's the feeling. That's the negative. It feels like when I go to buy a car, I feel like all they're trying to do is trick me until I leave and they get their money, right? Can we assume for a second that I'm not a crazy internet person trying to sell you fake stuff, okay? And I'm assuming that I'm also not trying to fool myself, right? This is a decision that I want to make in my portfolio. So I'm not going to make up crazy stuff to try to sell me something because I don't want to be sold fake stuff myself, right? So assuming I'm not a crazy internet used car salesperson, just assume for that, all right? Maybe you think that, but let's assume not. What would be holding you back from this portfolio, right? And when I say you, of course, I mean me. What's wrong? Why wouldn't you get started? What's the holdup? Well, Here are the potential problems, right? And maybe you thought them and maybe you didn't. Yes, you trade less if you do a Friday only portfolio, but you're also trading the weekend in some cases, right? And a lot of these trades, they start on Friday, they end on Friday. Hooray! But a lot of trades don't. A lot of trades start on Friday and they hold to Sunday. Well, in the Forex world, the Friday to Sunday gap is the danger zone. Stocks, you have this every single day, right? But in Forex, the huge problem zone is Friday to Sunday. And gaps in Forex are way worse than stocks because the leverage on Forex is way higher. So you can stand to lose in Forex on this gap quite a bit of money, right? But it can also gap your way, right? It can also start on Fridays and get huge gaps in your direction. In fact, that happened last Friday on the CAD yen and I think it was the pound CAD. Regardless, I've seen over and over and over of or trades, examples of trades where we started on Friday and they gapped up in their direction. Friday trading, Friday to Sunday trading is the only type of trading where you can make those big monies in this day trading portfolio, right? My day trading portfolio goes for tiny little wins and bigger stops to let the trades work out. I'm never going to get a massive win Monday through Friday, never. But Friday to Sunday is my chance, right? And it does this quote unquote gapping up in your direction for long trades and down if you're in short trades. It does it a lot. That's what makes these Friday portfolios work, is the favorable gaps. So you can be afraid of the Friday Sunday gaps, but guess what? That's also where you make all your money. So keep that in mind. Trade execution, right? In TradeStation, this wasn't a big problem. I mean, every now and then there'd be a trade on Sunday, the spreads would widen, and it looked like I had a winner, a big winner, and I didn't. But in TradeStation, when I used to trade this, many times it was pretty much the same. Well, I've worried a little bit about MT4 on Sunday because as soon as the market opened, the spread seem to widen greatly. In fact, I've turned off Sunday trading in my day-to-day, meaning starting on Sunday. I've turned that off because I couldn't get the spreads to match up with the spreads in TradeStation. However, when you go Friday, start on Friday with normal spreads and finish on Sunday, the 3 trades I've had so far have been just fine. So maybe there are huge spreads on Sunday, and yes, that's something to take account of, but I'm just telling you the last trades I have weren't that bad. So there is a concern, right? If you're trading a Friday only portfolio and you start getting losers or break evens that should be winners because of the spread, then of course that would ruin the Friday portfolio. So that is probably the biggest reason to worry about this portfolio or to not get started. Oh, but guess what? How do you find that out? You have to get started, right? Or you can get bored, right? You could just simply listen. I'm trading for a living. What am I doing? I'm not making any money, right? I'm not trading Sunday, Monday, Tuesday, Wednesday, Thursday. So if you get bored and you need action, this obviously is a problem, right? You could go crazy during the week and maybe you start discretionary trading or maybe you turn the robots on or whatever. There are a lot of mistakes. So you'd have to be the type of person that loves not being in the market or else this type of portfolio won't work. And psychologically, right? If you're trading for a living and you're going to go forward from on Friday only trading, it's hard. I'm not going to lie to you. It's hard to risk your monthly income, your monthly budget, your monthly mortgage, whatever it is. It's hard to risk that on a Friday to Sunday gap, right? It's hard to think, oh my goodness, I need to pay the bills this month and I'm in a Friday trade and what if it goes poorly? However, that's really not that much different than other trading, right? But I totally understand it, and it's something that I've had discussions about myself. Um, and then on the other side, though, there are the psychological benefits, right? That you're not trading, so the lifestyle of trading Friday only would be tremendous. The favorable gaps would be a party, right? The biggest trade I ever had was a Friday to Sunday gap, right? It was a little over $10,000 win, right? That was a Friday to Sunday gap. So There are psychological benefits. We've already mentioned the Friday only, but I totally get the fact that you're trading for a living and you're worried about it. All right. And of course, the problem, the drawdown could exceed the spreadsheet's data, right? Any spreadsheet you get, the drawdown could be worse, especially if you get a bunch of unfavorable gaps, right? But all you'd have to do if you got started is just look at the monthly numbers and look at it. Okay, this drawdown is way worse than anything I've seen. So maybe I need to reevaluate the robot. Maybe I need to go retest it. Or maybe I don't need to worry about it at all because maybe an unfavorable gap is going to lead to a favorable gap. But you can sit there and worry that the drawdown is going to be bigger. But guess what? There's only one way to find out, and that is to get started. So, in summary, I want to get started, right? We're going to ride through Brexit. I'm not trading through Brexit. It's just something I've never done before. It's unknown. I'm perfectly fine with standing aside for the rest of the week or whatever. I'm going to start either Friday or Monday. Probably Monday, but maybe not. I'm excited. I'm dying to get back into the market. But we're going to do a multiple parts, and I'm going to let you into my brain patterns to let you know what I want to start trading, right? Whether it's going to be multiple accounts, whether it's going to be an additional account, a brand new account. I'm ready to get started, right? I'm tired of testing. I'm tired of worried about execution. I'm tired of moving. I'm tired of all that. It's game time, as Scottie Pippen and Horace Grant, Michael Jordan told us, and I need to get started. Okay, so here are your latest updates. And by the way, look for parts 2 and maybe part 3 on this game time and figure out what I'm going to trade. All right. That doesn't change the fact that nothing's more important than getting trading costs. All right, but it's time to get started, and it's time to get started aggressively. It's time for me to get some money in the market and get this rolling. So trading costs are never going to stop being a #1 concern, but it's time to stop worrying about that only. It's time to get started and worrying as we go. Just a further update. I'm making a profitable change, a profitable addition to my new trend following robot. Just sent that to Wes. Wes is working on it last night and this morning. So that should be up and running. I should be able to talk about that. We mentioned it briefly, but I think I can do maybe even better. So I'll keep you informed on that. It won't be long. As I mentioned, I may make the move to VPS. Oanda might start offering it. I'm really excited about that. If it works properly, that would be great. That would be so, so great. I've never needed to use it, but I want to use it now, especially with my living situation. So I'll keep you posted on that. I'm not trading, as I mentioned, probably until Monday. I'm kind of dying to get in on Friday, but let's just assume I'm not trading until Monday. Brexit's June 23rd. It's tomorrow. I think it's a little bit ridiculous. I think Britain's going to stay, but regardless, I'm going to stay out. But Monday at the very latest, I'm going to be going in again. I'm going to be talking about more portfolio considerations, more game time stuff tomorrow at the Thursday webinar, 2 p.m. Eastern. Check my blog, the YouTube channel. I'm going to be doing a lot of YouTube videos. I am going to start writing too. I did promise that, and that's for sure also. But I'm going to keep doing videos. I do like that. So subscribe to my YouTube channel. All you got to do, obviously, is go to the videos and then hit subscribe. No big deal. But check the YouTube channel. If you subscribe, then you'll get every single video. Obviously, you'll know and you won't miss anything. Or just go to my blog. That's fine too. There's the contact information. Hopefully, you'll be with us tomorrow, Thursday, 2 p.m. The recording will go on YouTube and on my blog. And we're going to find a way to get started. And if you have any questions, of course, you can always email me. I will hopefully see you tomorrow and talk to you again soon. Bye.